Thank God it's Friday. Welcome to the final one for the week. This is Business Morning on Channels Television. Good morning. I'm Ini John Mekwa. Well, just before we delve into conversations for the day, let's start with oil prices. It climbed today, heading for gains of more than 2% for the week on increasing signs of tight supply over the next few months as rocketing gas and coal prices took a switch to oil products. U.S. West Texas Intermediate crude futures rose 30 cents to $81.61 a barrel, adding to an 87-cent jump yesterday. The contract was heading for a 3% gain on the week. Brent crude futures rose 28 cents, which is 0.3%, to $84.28 a barrel after picking up 82 cents in the previous session, and that leaves the contract set for a 2.3% rise for the week. Analysts point to a sharp drop in OECD oil stockpiles to their lowest level since 2015. Demand has picked up with recovery from the COVID-19 pandemic, with a further boost coming from industry turning away from expensive gas to coal to fuel oil and diesel for power. Now, the 6th Global Business Forum Africa, hosted by Dubai Chamber of Commerce, has come and gone. It ended yesterday. It was an opportunity for countries on the continent to explore avenues to build ties with the United Arab Emirates to boost trade and other bilateral relations. Nigeria's participation there has been in question for a while now, but we have our correspondent in Dubai, Mayo Adegoke, joining us to tell us a summary of how the event went and, of course, Nigeria's participation. Hello, Mayo. Good to see you.
Good to see you as well, Ini.
Yeah. So we do know that the AFCFTA was a major conversation there, but what other conversations did participants have?
Thank you very much, Ini. Now, of course, as you rightly said, the AFCFTA was a big part of that conversation. Other conversations were about attracting investors and boosting investor confidence. If there's one thing everybody agreed on, it is that Africa is a good place to invest. It is that Africa also needs investment. However, there are issues to consider, discuss, and resolve. Some of these issues mentioned during the two-day forum would be in infrastructure deficit, transparency in government regulation, speeding up digital transformation, better management of macroeconomies, also collaboration between African countries themselves. How can they work together? How can tech hubs begin to connect with one another? And I think one very interesting issue that was also raised is the confidence of the African people themselves to realize that, yes, we may be asking for investment. We are not beggars. We've got pride, we've got dignity, and we are equal to even the people that are going to give us this investment.
And the participation of the largest economy on the continent was obviously or unmissably not there. And that has also sparked another line of conversation.
Yes, Ini. For me, as a Nigerian, and being there those 2 days, it was a bit heartbreaking for me, honestly. So we did have 2 Nigerian participants during the sessions. We had Ifeanyiwa Ugochukwu, who is the CEO of Tony Elumelu Foundation, as well as Jason Njoku, who is founder of Iroko TV. Ifeanyiwa joined virtually. Jason, I know he's based in Ghana, and so he was there in person. Other than those 2, we had very few Nigerian delegates. I know of only one person who traveled from Nigeria to Dubai to be part of the event. And I'm not sure why exactly that happened, because I was there in 2019 and we had a very good Nigerian representation there. I'm sure that the whole flight ban situation would have played a major role in that, in what we saw turn out. But hopefully, because this year is gone, so hopefully next year it's a lot better. But Nigeria needs to be at this table. I don't see any table where you discuss Africa and African economies and not Nigeria not being there. That's almost impossible. So hopefully next year it's better.
Yeah, well, because I was going to ask if this is connected to the issue with renewal of working visas and, the travel restrictions between Nigeria and the UAE. Perhaps that is also a major reason why.
Honestly, some people disagree that they are connected, but it's hard to see how they are not connected. The issue of flight ban has been lingering since February of this year. It's a very long period. A lot of people thought that, you know what, just before Expo comes up, this issue will be resolved. People were holding their breaths for that, but unfortunately, the Expo is already a couple of days gone and the issue is still lingering. With regards to the work permits, we do know that part of that issue it was caused by crime linked to Nigerian nationals based here in the UAE. However, the big question is, how does the flight ban play into that conversation? I honestly think that there is a link. And I do think that the Nigerian Foreign Ministry has its work cut out for it. One thing that a lot of Nigerians here would like to see is better communication. What is the situation? What is going on? The UAE ambassador in Abuja did say that there's no official ban, but the reality here is quite different. So what is going on? So the Ministry of Foreign Affairs, they've got their work cut out for them, and it'd be great for them to share with the Nigerian community what steps are being taken to resolve these issues.
Certainly, Maiwa, thank you so much. And I know we're going to talk to you later on during Business Incorporated. So let's talk to you later.
See you. Bye.
So one of the issues that was also discussed there was the vaccine passport. So following up on that, we'll be speaking on it and the possible impact on Nigeria. Our guest will be Professor Debussy Nwokoma, and that'll be after the break to join us again. Welcome back. Well, African aviation ministers have rejected the imposition of vaccine passport for air travels. They argue that the imposition was tantamount to discrimination against certain groups of population, especially on the African continent, which still has considerable number of its citizens yet to be vaccinated. Now, for a little background, COVID passports have been introduced in Scotland and Wales for entry into nightclubs and large events, while England has just scrapped its plans in Ontario, Canada. There's an app which could verify a person's COVID-19 vaccination status. So obviously, this is the new normal, living with COVID-19. How is Nigeria adjusting to it? What are Nigeria's thoughts about this the vaccine passport and how we're adjusting to that? Well, we have Professor Debussy Nwokoma, Professor of Financial Economics and Director of the Center for Economic Policy Analysis and Research at the University of Lagos, joining us for this conversation. Good to have you, Professor Nwokoma. Good morning.
Good morning. Thank you for having me.
So COVID-19 protocols have made traveling more expensive and cumbersome, and of course it has affected the sector. Do you think that the vaccine passport will boost travels again?
I think your guess is as good as mine. I don't think it will boost travels because if you take a look at the world globally, many countries actually have had less than 10% of vaccinations across, particularly in Africa. So when you now begin to introduce vaccine passports, many people are being, marginalized from the travel activity. And if you take a look at Nigeria's GDP, the last one, the Q2 GDP for this year, it's covered that the jump to about 5% was due mainly to transportation, among other services and so on. So with transportation having a hit with this vaccine passport rule, then definitely is going to affect travels, not only in Africa, but particularly in Africa, but across the world. Except you are vaccinated or you have tested negative, definitely you have a problem with travel, and that will affect the global aviation industry. So I think it's not something that we should do in a hurry, or else it will affect the global economy.
Okay, and when we talk about the possible impact, on Africa, generally, the global interactions, where there, of course, like we just discussed with our correspondent in Dubai, you have less people already vaccinated on the continent. What are the possible economic impacts, if this is introduced?
Well, the impact can be seen from two perspectives. Number one, we can look at it from the perspective of those who have been vaccinated, and then how it will help to arrest the spread of this disease or this virus. So I think that is from the positive perspective. Then negatively, you discover that many people will be cut off from the travel industry. So economically, the negative effect for me now is actually more than the positive effect. Because when many persons actually cannot travel because of so many obstacles on the way, traveling and all that, then the global economy, the exchange of goods and services actually will be affected into some sense, interactions globally, from the negative perspective. So many countries' economies, many countries will more or less like they have to operate within their own territories as against being able to interact with the global community. On the positive side, like I said, the disease will be curtailed. And I think what we need to be pursuing now is to get more persons vaccinated. That is the solution. If we don't do that, then the economy of various countries, as well as that of the globe, will be adversely affected, in my opinion.
But don't you think that, that might, on one hand, help people to overcome the reluctance of getting vaccinated? Because we still have, that feeling and that perspective where some people are reluctant to actually get vaccinated.
Yes, well, there are the conspiracy theories, which I'm sure many of us are familiar with, about 5G and so on, about 666. Even in America, many persons in America of some particular persuasions actually are very reluctant to have the vaccination because of so many theories on that. So it's a challenge. I think the issue is to be able to address these challenges, these theories, and see how people can be made to believe in the vaccine. People have said that the thing is actually an experimental treatment. It's experimental, so why should they be used as an experiment? But from data that is coming out, it shows that many of those who are dying of COVID-19 now are those who are not vaccinated. Even though those who are vaccinated, some of them are dying, but by proportion. We can see that the vaccination slows down the progression of the virus. And it's something that we need to engage the public, particularly those who are reluctant. We need to engage them and let them know that the benefits actually outweigh the risks. And that is actually where I think the main job has to be done. So that when people get convinced, then they would begin to join the queue and get vaccinated. And once that happens, then it affects the travel industry. It affects the global economy. It affects people's interactions. So we need to address those conspiracy theories. And that, I think, is a major thing that needs to be done, much more than having this. The passport is okay, vaccine passport. You must be vaccinated before you can move. But let us get more people on board by addressing the conspiracy theories so that people can join this queue, get vaccinated, and the economy can actually move on, not only for each country, but globally. Definitely, it will affect GDP globally if we don't address these conspiracy theories.
So many businesses, particularly the informal ones, reported poor access to credit, capital to sustain their enterprises, including difficulty paying fixed costs like rent. And now we have the surge in commodity prices. Is there a way, and all this, of course, are connected one way or the other to the pandemic, is there a way to stem this from the economic point of view? Is there a way we can just get things back on track?
Yes. I think from the economic perspective, government needs to engage the society, the public. There's still need for palliatives in Nigeria and across many countries, but many people are yet to recover fully from the effects of the pandemic. I think government needs to strengthen the social safety net. So it's very, very important. That's number one. Secondly, credit needs to be made available to small-scale businesses. They suffered heavily because many people live on a daily basis. They earn their income daily. They are not persons that can actually survive 1 week or 2 weeks of shutdown or lockdown, whatever. So government needs to find a way through the Central Bank of Nigeria, the Bank of Industry, being able to enhance credit to the vulnerable small firms, SMEs. Many of them actually are going out of business because we have an unconducive environment for business. And I think it's an area. So credits need to be strengthened and made less difficult to get. which means if you need to get, don't say go and bring your this, bring that, bring your grandfather's shirt, or bring this before you can get some credit. They should make it easier, make it more accessible. Central bank can play a very key role. On lending through the bank, the microfinance institutions can actually come in through support from the central bank, strengthen the on-lending facilities so that SMEs can gain access to some basic credit. If government can actually strengthen this, their trader money, money for business and so on, strengthen them not for political purposes, but to enhance the informal sector, it will help. So that can be supported with some measure of palliative in one form or other, because if you look at the inflation rate, it's not conducive for the small business. Now we know about the exchange rate, which actually will have a transmission mechanism to prices and to other macro indicators. So government needs to come in, find a way to grant more palliative to the poor, the very, very poor, as well as strengthen credit through central bank and through the Bank of Industry, and even enhance the trader money program in Nigeria so that they can have some little credit to strengthen their businesses.
The government doesn't have a lot of liquidity at its disposal, so if the government has to do this and do that, they also have the revenue issue to deal with.
Well, I think government needs to reorder its priorities. It needs to reorder its priorities. If you look at this year's budget and what money is being budgeted to do it for, you find that there's need for some kind of reorganization, because you need to have the base of the economy functioning. If you take a look at the level of borrowing and all that, where are these monies going into? You cannot have people who are dying. You're talking about having infrastructure. You must address the social sector, very critical. You must address the ordinary person to be alive. Because you must address the growing incidence of poverty in the society. If people are getting poorer and poorer every day, they can't do business, they can't actually survive with the earnings, on a daily basis. Then that's an area they need to rearrange and their priorities to focus on. If you want to build a railroad from here to Niger Republic, that is not a priority. If you want to build a railroad across the country, yes, these are good, but the people must be alive. So I'm not even sure it will cost so much if you begin to invest in the people. People investment is the greatest investment you can have, so that those who are doing minor businesses, 10,000 naira, 50,000 naira as credit, to be able to sell bread, sell pure water. It will strengthen that. And I'm not sure the amount of money being talked about here is quite significant. So it's something that the government needs to focus. And as they discuss this year's budget, they need to take that into consideration, that the ordinary man needs to be taken into account as they plan the budget, so that people will not die while we are still building all the railroads across the country. As I think it's an area that government can handle without affecting significantly their budget program.
All right, Professor Ndubisi Nwokoma, thank you so much for sharing your thoughts with us this morning.
Thank you for having me. Thanks.
So after the break, the CBN spends about $2 billion for importing wheat annually. There should be a change in that space, don't you think? We'll find out after the break. Is Business Morning on Channels Television. You're welcome back. Well, the Central Bank of Nigeria has revealed that importation of wheat costs the country about $2 billion annually, thereby exerting pressure on the country's food import bill. Wheat is the CBN's second highest contributor, with over 5 million metric tons imported annually. While stating its commitment to address the existing challenges in the wheat value chain, wheat may now be added to the items not eligible for FX access. Well, what are the possible impacts of that? We have Michael Ogunremi, microeconomist and fixed income analyst with Chapel Hill Denham, joining us for that conversation. Hi, Michael. Good morning.
Hi, good morning.
Well, the CBN has hinted the addition of wheat to the items of not eligible for FX in the bid to foster domestic production. What impacts do you think this will have?
Well, so if you look at it, if the CBN decide to go ahead as planned with this policy, I think it's important to understand that this will filter into food inflation, right? That's like the immediate impact of this policy. Currently, food inflation is above 20%, and a lot of Nigerians are feeling the dire effect of it. And when you also consider the versatility of wheat, it feeds as an intermediate input to quite a lot of food items, which the average Nigerian consume. It tells a tale of increase in the level of food inflation that we're going to see. Another factor to also look at would be what happens in the parallel markets. So if the CBN is saying that we're going to restrict provision of FX, for import of wheat, then it means that manufacturers who use wheat for their production will have to fall back to the parallel markets to get wheat, and these will of course put more pressure in the parallel markets and sort of like increase the rates we have in that space. So when you put these two effects together, what it simply means is that manufacturers will most likely continue to use the parallel market to sort of source for FX, and as long as they can get it, they will simply pass the increased cost to consumers in the form of higher prices, and that would filter into food inflation.
So the CBN is optimistic that Nigeria can achieve self-sufficiency in wheat production, but conversations around this have shown that the quality of wheat used as raw materials in Nigeria cannot be produced in the country. So what, from your perspective, is the reality of this?
So wheat is, it's very difficult to produce wheat in Nigeria, just like most people admit. There are very few locations where wheat can be cultivated in Nigeria. And I would say that it might just be, it might be a good strategy to sort of explore all opportunities we have in those locations, right? To sort of like produce wheat. However, considering the fact that the level of demand that we have for wheat in Nigeria is currently about 5.7 billion metric tons, it simply means that even if we explore all the opportunities we have in the locations where wheat can be cultivated, there will still be the need to import, and that simply speaks to the fact that it might be very, very challenging for us to produce the quality of wheat that manufacturers are currently using. However, what I've come to understand about agriculture is there is some sort of knowledge fusion, technology assimilation, and all of that can take place. So there are new ways and new methods of cultivating without having to go through the normal rural farming of tilling the ground and all of that. So if the CBN is really keen on ensuring that there is self-sufficiency in wheat production, they have to also find a way to bring in technologies, modern technologies that can be used to produce wheat on a large scale basis without having to subject ourselves to the climatic constraints that we have in Nigeria. If they're able to bring in technology, bring in people who can teach the rural local Nigerians how to produce this wheat, barring the climatic conditions that we have, I think it's still very possible to achieve some sort of self-sufficiency in wheat production.
What you just said reminds me of what a member of the House of Representatives said yesterday. It was on our news that these days it seems that the CBN is doing everything, being the bank of industry, being the bank of agriculture. So with this line of thoughts that you have brought up, is it still in the area of responsibility of the CBN, or maybe the CBN should just sell the idea to someone else or fund it or to another bank or investment area?
So what I think about this is every ministry, every parastatal within the government have responsibility, and it all boils down to compartmentalizing, responsibilities. If responsibilities are compartmentalized and every, ministry and department and parastatal, put in a strong foot forward in ensuring that what they're responsible for they go all out and achieve it, I don't think the CBN would purge into their space. For instance, if the Ministry of Agriculture, for instance, is putting their best foot forward to ensure that wheat production is at a high scale in Nigeria, you most likely wouldn't see the CBN come into that space. What you most likely see them do is, sort of provide funding, to the Ministry of Agriculture, and then allow the Ministry of Agriculture direct, chart the course of wheat production in Nigeria. Now, bringing it back to what I said earlier, as long as, the gaps in responsibilities still lies in these ministries, a lot of things that are supposed to be done by these ministries are not being done, you will have the CBN continue to do them. Is it right? Is it wrong? Well, it all boils down to someone doing it, regardless of whether it is right or whether it is wrong. Although the CBN is doing too much, in my opinion, intervening in MSMEs, participating in agriculture, industrialization drive, electricity. They're doing so much, and it's also one of the issues that they are currently having, in terms of managing the arsenals that they currently have to sort of steer the course of the economy. So I would say that as long as each ministries and departments can put their best foot forward in achieving the goals and the responsibilities that they have, I don't think the CBN will patch into their space, and that sort of creates the delineation of responsibilities that we're looking to see.
All right. Well, assuming that this ban is implemented, what impacts do you see it having on the economy?
Well, if the ban is implemented, just like I said before, I think the near effect of it would be that prices of most staple commodities that are consumed by Nigerians, will most likely increase. And currently, inflation printed at 17.01% in the month of August. Food inflation was above 20%. That's already high, considering the economic situation we have in the country. Most Nigerians are unable to afford basic foodstuffs that they consume on a daily basis. And when you now factor in a ban for wheat, I simply think inflation is most likely going to increase. Another effect, just like I also said before, is in the area of exchange rates. The CBN is trying to achieve a convergence of exchange rates, which they've been able to do since the month of May. But there is still a premium. There's still this huge premium we have between what obtains in the parallel markets and then what currently obtains in the I&E window, and then in the official window, which is now adopting the I&E rates. And the impact of that premium is that we continue to see a whole lot of round tripping, speculative activity and rent seeking activities, between the I&E market and then in the parallel market, right? So if the ban on wheat is fully implemented, we're going to see more demand for importers in the parallel market, and that sort of put more pressure on the rate of the parallel market. Eventually, we'll have escalating premium, and then we'll continue to see more, of this rent-seeking activity, which the CBN is trying to reduce, to sort of like reduce the pressure on the naira. So for me, I think that would be the two, main impacts. What happens to food prices, and then what happens to the whole idea of FX convergence that the CBN is trying to achieve.
Okay. And then apart from, this idea of restricting imports for FX, what other method do you think can solve this issue?
Interesting question. So I think the first thing would be to say that restricting FX, restricting sale of FX for imports doesn't really solve our FX challenges. I like to think that Nigeria's FX challenges is the structural one, and can only be solved by structural strategies. We need a stable reserve, a reserve that would not fluctuate. And for us to do that, we need a stable source of foreign exchange, which is definitely not oil. As a matter of fact, the price and the quantity, of oil that Nigeria sells is not even determined by Nigeria. So why rely on oil as the main source, as the mainstay of the economy? I don't think it's. I think it's counterintuitive. So I would say that number one, I think to sort of improve the production of wheat and sort of achieve self-sufficiency instead of restricting sale of FX. I think one of the things that the government can do is the cost savings that we would have from not using FX. The CBN can channel this cost saving into large-scale agricultural production of wheat. Just like I said before, Nigeria may not have the necessary climatic conditions, but if technology is anything to go by, if technology has taught us anything, it is a fact that we can beat natural conditions to sort of achieve our goals, right? So I strongly believe that there are a whole lot of technologies and ideas and strategies that can be used to produce wheat despite the climatic constraint that we have. Another thing that the CBN can do is to latch onto derivatives, right? So we have crude oil, we need wheat. Instead of using our dire FX reserve to pay for this wheat, you can have a crude for wheat swap. You enter into a commodity future, that sort of helps the country to take custody of wheat, sometimes in the future for an agreed amount of crude.
All right, Michael, thank you so much for sharing your thoughts with us this morning. Michael Ogurami is a microeconomist and fixed income analyst with Chapel Hill. Then enjoy the rest of your day.
Thank you very much.
So let's do an opening call to the markets now. Will Ibong is here. Hello, Will. You were on fire last night.
Morning, I was on fire, but it seems like the fire is beginning to get, a bit cold this morning. I woke up really cold, but the stock market is still on fire despite my disposition. The stock market maintained a positive trading for the third straight session as sustained buying interest in First Bank, which was up about 7.3% yesterday, drove the all-share index higher, and this amid the positive market breadth. The all-share index advanced by 0.19%, so 41,129.98 points, with month-to-date and year-to-date gains increasing to 2.3% and 2.1% respectively. The total volume of trades surged by 103.5% to 908.06 million units, valued at 10.97 billion naira, and all transacted in over 5,000 deals. And First Bank's still top trades yesterday by volume and value. That stock is really trading hot. And analyzing it by sectors, we see that the insurance, the banking, and the oil and gas indexes declined yesterday, except for the consumer goods and industrial goods indexes, which posted gains. Now, the picture is not so bright. It was, it was very bright at the unlisted securities market as the NASD index moved made a very strong rebound in yesterday's trading session. It was up by more than 1% at 746.8 points, and valued, the market cap stood at 606.99 billion naira. Also, volume rose significantly yesterday, and we saw that total value of transactions yesterday was at 302.67 million naira, and in 5 deals. At the fixed income market, the bond market opened yesterday on a very calm note. As trading progressed, we observed there was intense activity on select short and long instruments, with emphasis on the 2026 and 2050 papers. Offers were seen at 11% and 13.15% respectively. But to give us more insight about what happened, what transpired in the fixed income market and other segments, is Chuka Nwachukwu, is the head bonds trading at UBA. Good morning, Chuka. How are you doing today?
I'm fine. Good morning. How are you?
Great. Chuka, there was an OMO auction yesterday. Could you quickly give us a rundown of what happened, a summary of what happened yesterday at the OMO auction?
Okay, thank you. So there was an OMO auction yesterday. This is the first auction over 3 weeks to 1 month. And so 50 billion was on offer. Total subscription was about 58 billion. And then stop rates ranges from 82 days, 7%, 182 days at 8.5%, and then the 1 year at 10.1%. So it's it was a really good auction, because a lot of traders have been looking forward to this auction for, like I said, for the past 3 weeks, and then we had it yesterday, and everybody had a good day.
Okay, good. It's long awaited, but I also observed that the CBN offered OMO bills, what 50 billion naira, but did not allot beyond that. Can you tell us why that is?
Okay, basically, the OMO is actually the amount of maturity that that is being offered. So 50 billion was offered. That's what was matured. However, OMO is kind of like restricted for some certain participants as well. So basically, if you notice the subscription and then from the offer is just short of 18 billion. Yeah, so we didn't think that there was much interest other than that. And again, of course, CBN has they know what they are looking out for, and then I believe that they were comfortable, at the 50 billion sales, which they eventually did.
Okay, also, we saw that the stop rates were maintained across the OMO maturities. However, when we flash back to Wednesday, during the Treasury bill auction on Wednesday, there was a downtrend of 25 basis points in the stop rate for the 364-day paper, from 7.5 to 7.25%. What triggered this?
Yeah, so NCD was on Wednesday. On offer was about 121 billion. Subscription was well over 493 billion, so it was a huge subscription. However, CBN, DMO sold 187 billion at stop rate of for 91 days 2.5%, 182 days at 3.5%, and then 1 year at 7.25%. Now, like you rightly mentioned, the 1 year, which is the longer end, the last auction before this one came out at 7.5% from 7.2%. So everybody thought that that will signal the upward trend in movement of yield. However, DMO in a bid, I believe, in a bid to save costs in terms of borrowing, reduce the rate from 7.5% to 7.25%. I believe that it's an indication of what they intend to do in terms of where yields will close at the end of the year. So for traders, it's kind of like gives an indication what DMO's intentions are. Now, if you look at the what you call the projection, as a trader, you have what you call your forecast. You have the sense that within the next 2 to 3 months before the end of the year, the yield will hover within this level between 7.25, 7.3, 7.5 maximum. I do not see that the yield will go above this level for now.
So you're saying that from what you just said, if I just recap, you're saying that this downtrend, this drop in this 25 basis points drop in the 364 paper Treasury bills will set the tone for the direction of yields for other segments in the fixed income market. Is that so?
Within the short period, yes, because you will see there's a knee-jerk effect, right? So now, for other fixed income instruments, especially on the bond side, we didn't see that reaction. There was a resistance on the bond side. So usually, if there's a drop in NCD rate, you definitely see it on the bond side, but we haven't seen that happen yet. The reason being that there's with the government budget, the budget that the president presented to the National Assembly last week, you see that the deficit of about 6 trillion. So that, as a trader, that gives you an indication that the government is going to borrow more. But now, is it for this year? No, I don't think so. So on the bond side, we feel that yield will move up, significantly. But on the T-bill side, within the short term, this will chart the course for the rest of the year.
Thank you so much, Chuka, for that input and that insight elaboration of what happened yesterday. That's Chuka Nwachukwu, the head of bonds trading at UBA. So, Ini, that's what we have for the market today.
All right, thank you so much. We'll just take a little breather, and then when we come back, we'll head to Juliana in London. Well, you're welcome back. Let's see what's happening in the UK now. Some weeks ago, a letter was sent to the Prime Minister to save Christmas. Well, now the Transport Minister is assuring Britons that they will be able to get things for Christmas. Well, we'll have Juliana joining us now to tell us if this is the situation or what's the latest in this area. Hello, Juliana. Well, first of all, congratulations on the award yesterday from the 6th London Political Summit.
Oh, thank you, Winnie, and congratulations to my entire Channels TV family, because it was a double award-winning day, not just for me, but for Channels TV's diaspora coverage. So yes, we should be very proud of ourselves.
Yeah, proud of you too from here. And well, to the business of the day now, this reassurance from the Minister of Transport on Christmas stock, has it calmed nerves, or what's it based on?
Yeah, this is a really interesting story. First of all, I'm backstage at the Nigeria Diaspora Direct Investment Summit. I'm sure our viewers will realize I'm not in the studio, and I'll be making sure I'll update on all the happenings that are taking place here. But even those who are here today will be thinking in the back of their minds, shall I start ordering presents for Christmas? Because it is a massive issue. As you said, a couple of weeks ago, there was a letter written to Prime Minister Boris Johnson urging him to save Christmas. Just a couple of days ago, Britain's largest port, Felixstowe, started complaining about logjams, serious logjams, where lots of imports that are coming from across the world just cannot get off the ships. They can't get off the ships because there are not enough people to take them off, and there are not enough lorry drivers to drive them to their destination. We saw this during the panic buying at the pumps, that there is a shortage of about 100,000 lorry drivers, and the government are trying to do whatever they can to calm down the public, but also to try and get the lorry drivers working in the country.
And Britain's haulage industry has criticized the government's plan to relax cabotage rules for overseas drivers. Isn't this to solve the supply disruption that has been going on in the country?
Well, yes, according to the Transport Minister, Grant Shapps, this is exactly what it's going to do. So when we realised that the shortage was getting out of hand, which is why we had to deploy the military to start delivering fuel to the pumps, the Home Secretary, Priti Patel, decided to extend visas to foreign, European, EU-based HGV drivers that could come to the UK. I believe there are about 5,000 of these licenses, of these visas that were going to be given out. And currently, under regulations, EU drivers driving within the UK can only carry 2 loads. So 2 loads of deliveries is what they can do, massive loads, of course. But now, under these new plans to try and sort out these shortages, this will be scrapped to as many packages or deliveries that they would want to do. This is what the Transport Secretary is saying is the solution. And of course, this is now receiving some pretty serious backlash from UK-based drivers. Again, going back to one of the reasons why we went into Brexit in the first place, they believe that they could potentially be replaced with cheap foreign labour. But of course, it's kind of a lose-lose or win-win situation, however you would want to see it. But there are some stumbling blocks, one of them being this still needs to go through weeks worth of consultation. And secondly, one of the major issues is that we don't yet have these lorry drivers in the UK in the first place. They're not even here yet. We're not expecting them to arrive until next month. So I don't know yet, if, toys will be delivered at Christmas. But yes, we'll just have to wait and see.
Yes, I think we really have to hold the Minister of Transport. He should tell us the factors he's put in place, before the assurance that he's giving to Britons about the Christmas stock. Anyway, thank you so much, Juliana. I hope we'll talk to you later anyway. Hope you'll be in the studio by then. Okay, so let's head to the crypto space now. Well, I know there's a red and there's a green in the market, but it seems today is an orange Friday, if there's anything like that. The market cap has gone up to $2.38 trillion. This time yesterday it was 2.43. That's an increase. No, it went from 3.38 to 2.43 to 2.43 this morning. That's a 2.47 increase. And the market volume was down. That's why I say it's orange. It's so mixed. 0.15% to $109.75 billion. Now, the total volume of DeFi is currently $14.54 billion. That's 13.25% of the total crypto market 24-hour volume. And the volume of all stable coin is now $85.24 billion, and that's 77.67% of the total crypto market 24-hour volume. The price of Bitcoin has added close to $2,000 in 24 hours. This time yesterday it was about 57,000. Now it's 59,227. No, this was about 8:30 this morning. I don't know what it is at this time. 59,272, and it was higher than that at some points, though. Its dominance is now 45.88%. Its 24-hour volume, $39.62 billion. Ethereum is also on fire, doing good, with almost 5% increase in 24 hours, and its volume has gone from $17 billion. Yesterday, when we had this conversation, it was $17 billion. Now, or earlier, it was about $21 billion. That's just in 24 hours. On the gainers list, we have Cardano. It gained 3 cents 24 hours. In 24 hours at $2.20, an impressive jump by Solana, also more than 8%. Wrap Bitcoin was up almost 3%, while Litecoin gained just 2%. On the flip side, Polkadot is back on that loser stable, shedding 1.35%. Yesterday, it was $41.16. This morning, it settled at 40.77. Even Dogecoin lost almost 2% from yesterday till today. So it's an Orange Friday. And that's it on the program for this week. Thank you so much for being a part of it. 1:30, Business Incorporated will be back. So let's have this conversation, this business conversation again at 1:30. But I'm Ini John Mekwa.